AI has been the market this year, last year. A big question is, does that become the market once again for 2026?
I wish I could say there's going to be some big new theme that we're all going to get to focus
Not
on
quantum?
for 2026.
No,
Maybe quantum, maybe quantum. I don't really have the crystal ball, but I mean, it's clear that from both the equity market side and then also the debt side, the focus is still on AI, because now we're not only seeing like equity strategists pile into this theme, but we're also seeing now anyone who's a debt investor, whether it's an investment grade company tapping into debt to build out a data center, or even some of those lower rated companies as well. So AI still the theme, but it's interesting that today we're seeing a pretty risk on day in the market. Usually if we were to get good economic data, we would see small caps rallying. We would see more like economic cyclical companies outperforming, but today tech is higher, financials higher, utilities are higher. But
what do you think? Why do you think the reason for that is? I mean, when you talk about 4+ percentage points on GDP growth, consumer spending holding up, business spending still holding up, and I understand you had some softness with regards to consumer confidence and maybe with business orders overall. But that still sounds like a stable economy, which I think would benefit small and mid caps.
Yeah, I think for today and probably tomorrow and next week, it's low volume. We're about 35% less volume than the past month right now. There's not really a reason to sell tech, particularly as we're focusing on AI for 2026 as well. I think traders are feeling like any of the traders who are still on Wall Street, still at their desks, why mess with what has worked already? And when we have a day where, yes, we got this consumer confidence data that's potentially signaling, what could come ahead, why would you sell on a day when the GDP surprises so much to the upside? There's not really like a reason to be bearish right now.
Apart from the Fed doesn't cut as much, and therefore maybe that's why Bitcoin's down a little bit. What are you seeing in terms of that trade?
Yeah, so that's it is surprising. I mean, we do have rates a little bit higher today, especially in the front end, which again could suggest if the economy is too hot, maybe we don't need a rate cut. But if you look at what some of the strategists were saying, even Wells Fargo weighing in saying, the economy's hot, investors should pay attention to the positive trends. We believe the next 12 months will favor U.S. equities based on our expectations for higher U.S. GDP, broadening, accelerating earnings growth, moderating inflation, and improved global growth. At the end of the day, economic growth drives earnings, drives stock prices. So I think that's kind of the bet right now, less focus on this potentially keeping inflation higher and then keeping the Fed.
And is that what the catalyst is? The next catalyst for investors more broadly is going to be fundamental data. It's going to be earnings. It's going to be seeing which companies are able to drive forward productivity and revenue.
Yeah, I think that'll be a focus, particularly when it comes to AI. I know that you focus on this. There's been all of this CapEx spending on AI in 2025. Are we going to see it actually pay off next year? So
I think patience is needed.
But some of the rotation that we've seen over the last couple of months seems to suggest that the idea that people are moving away from, or not necessarily moving away, but trying to look beyond just the picks and shovels, the chips, et cetera, and start to look at maybe like the financial companies that will have greater productivity, or the retailers that will find better ways to use AI and this technology to get you to, buy whatever it is they want to buy. And it seems like a lot more people are trying to look for those opportunities now than maybe what they were, 12 months ago.
Yeah, you hear a lot of people, again, talking about the broadening out of the rally, that maybe this is the time that you want to pivot into the equal weight S&P 500, for example, over the cap-weighted S&P 500 that we all know. I will caveat, again, though, that people were saying that at the beginning of 2025, that this was going to be the big year of the rotation. And there was so much talk of sell America, particularly in April after the tariffs. And this has been another example of, why would you short the S&P 500? Like, if you just buy SPY and you hold it, you're up almost 18% year to date, despite all of the volatility. So definitely people talking about the rotation, but, at least in ETF world, people are still buying SPY.
I mean, there has been that frothier part of the market come out, though.
Oh, yeah.
The momentum trades, dare I say, quantum got a lot of the bubble pushed out of it. A lot of the power names suddenly got a little bit deflated. Also, the crypto space has just been really painful for the ETF landscape as well.
Oh, absolutely. So the Bitcoin ETF, BlackRock's ETF, it's one of the top inflow funds for the year, people piling billions into there. But I think it's a negative return right now. Bitcoin, down 6% year to date. that was a hot theme. If you go on BlackRock's website, they're still touting, one of the hot themes, buying Bitcoin. It really didn't pay off for a lot of people. If you got in at the beginning of the year, you're negative, you're down.